I will now like to thank Johnny for coming today to present cryptocurrencies and blockchain. And this event has been organised by our Chief ESG Officer, Ryan Mcmillan. So, Ryan, if you could please introduce Johnny to us, please, and then we will get going.
Yeah, thank you for that, Callum. So, Johnny McCamley has been an investor in crypto assets from December 2015, and he actively manages his own crypto asset portfolio with a focus on long and medium term investments, and he's also involved in term trading in the crypto asset market, as well as his own personal activity within the stock market itself. Now, Johnny is the founder of CryptoClear, where he would teach you everything you need to know, the A to Z's of crypto asset investing. So without further ado, it's my great honour and privilege, and our group's privilege as the University of Stirling's Student Managed Investment Fund to introduce to you Mr. Johnny McCamley. Over to you, Johnny.
Thank you very much, everybody. I'm just going to share my screen, and hopefully you should be able to see the PowerPoint presentation that I've prepared for you.
Yeah, that's there, Johnny.
Fantastic, brilliant. So, as you've already done the introductions, Ryan, I think I'll just get straight into it. So, thanks once again to Ryan for first getting in contact with me, for myself to talk about something that I'm so passionate about, which is crypto asset investing. So in this presentation, I'm going to talk about, well, I'm not going to talk about that actually, because you just introduced me. So we'll go over what are crypto assets, what is blockchain technology, the underlying technology behind crypto, the risks associated with investing in crypto assets, why invest in crypto, a methodology that I have developed and honed from December 2015, which I believe allows me to distinguish good investments in the crypto assets as opposed to bad ones, as there are over 8,000 crypto assets out there. And also we're going to discuss how do crypto assets fit into a traditional portfolio. And finally, a really key area which was highly requested, as Ryan was saying, is a specific talk on Bitcoin. And of course, a summary and any contact details if you wish to ask any further questions. So crypto assets, which are commonly referred to as cryptocurrency, I wouldn't really consider them cryptocurrencies, more crypto assets. So these are digital assets which can be transferred, stored, and traded electronically. It would be important to remember that crypto assets, only 1% of them hold actual real life value that I would consider a worthwhile investment, as they have real life use cases. As stated before, there are around 8,000, I think it's 8,004 the last time I counted crypto assets out there. And really 99% of them have false promises, and a lot of them are in fact scams. It should also be noted that crypto assets are not issued by a central bank, credit institution, or e-money institution, in which I'm sure you've heard the term central bank digital currency floating around, or digital dollar, or digital euro. This is something which is not a crypto asset, but a central bank digital currency. So blockchain. So a blockchain is a continuously growing list of records called blocks. That really is the easiest way to think about it. These blocks are linked and secured using what is called cryptography, and each block typically contains a cryptographic hash of the previous block, a timestamp, and also transaction data. By design, a blockchain is resistant to modification of any of this data, except for 51% attacks, which again would be something for another presentation. Blockchain is, of course, open, distributed, and of course is a ledger that can record transactions between two parties efficiently, and most importantly, in a verifiable and permanent way. Blockchain is also referred to many as the Internet of Value. While the Internet today created a place of information exchange, there is a gap, and the gap is payments. 3 to 5 day settlements are something from legacy systems such as Swift that really haven't changed from the 70s. And this needs to change and will change with blockchain and crypto. I wasn't around at the time, or I was about 2 or 3 years old, but when I do comparisons to what's going on right now with crypto and the dot-com era in 1997, there really is a clear comparison. Senseless and really useless IPOs flooded the market back then, again with no use case, as we're seeing today with many crypto assets. There really is only the 1% that survived the dot-com crash and ultimately thrived, and I believe the same thing will happen with crypto. And of course, I believe that blockchain is not only here to stay, but it is also a technology that will transform many industries, namely the finance industry, among many others. As the internet has hugely impacted our everyday lives, social media has changed, as we know, how we interact with our friends and family, especially during times like this with COVID. And online shopping has also changed our shopping experiences through Amazon. I mean, very few people will actually go to the shops to buy stuff now. And the number of use cases for blockchain technology and crypto assets is really endless. So next we're going to discuss addresses. So I'm not too sure whether you have heard about crypto addresses, public and private keys. So just to give you a bit of history on it, so during the early stages of Bitcoin, even before I get into it, someone could use an IP address to both send and receive Bitcoins. At the time, the system was proven to be vulnerable to attacks, so developers soon implemented a new system which was based on cryptography, in which both sending and receiving of Bitcoin were made to addresses which are derived from a set of private and public keys. And without getting too technical on this, the basic model is based on the use of a private key, which is then used to create a public key, which then again is used to create a public address. And this public address is what is used to send and receive your funds. Again, it was a matter of time before they realized that this method of deriving an address lacked privacy. That is because a private key will only generate a max of 2 public keys, which in turn will create a max of 2 public addresses. And if you use these addresses multiple times for spending, someone can check their balance. People think Bitcoin is anonymous. It really isn't. It's pseudo-anonymous. It can be tracked. There would be people out there who would be able to do it. So if you use addresses multiple times for spending, someone can easily check their balance and what you hold in Bitcoin or other crypto assets. They will easily be able to connect your address to you as a physical person. It's almost like publishing your savings account balance online. So a solution to this problem came from using a master private key, which is used today. So this master private key generates a near infinite number of private keys. So this will obviously solve the privacy problem by using different addresses for every transaction so that no one can connect the dots and trace transactions back to you. However, the only thing you have to remember is your master private key, also known as your seed key. And it was only a few weeks ago, I don't know whether any of you have seen it on the news, it was widely published in Forbes and BBC. There was a guy who was involved pretty early in Bitcoin, Stephen Thomas, who had around 300 million US dollars locked away in a Bitcoin address, and his password is saved on a true key device, a hardware key, and you only have 10 guesses in total. He now has 2 left to go before the hard drive completely resets itself, so he won't be able to access those Bitcoins. So obviously that entails the risks, which we're going to deep dive into a bit later on in the presentation. So just a bit more on the seed keys. These are usually 12 or 24 words. And as an extra layer of security for this, which I always do, you can also use an additional word or a passphrase. It's all done by your hard drive wallet. And any multi-currency wallet will use one seed and derive this address for all types of assets you use. That really is the magic of storing near any cryptocurrency you wish, while all you have to remember is a 24-word seed. So this will lead us to the conclusion that cryptocurrencies are stored on the blockchain, as opposed to the devices or software wallets that you store, so to say, your crypto assets in. The amount of crypto assets that you own is referred to a specific address rather than a device you hold in your hand, which holds the private keys. In relation to risk, a huge area, as stated before with Stephen Thomas, what happened there is in relation to security for your crypto assets. So these are crypto asset wallets, 6 different types. I would only recommend using a desktop app or a hardware device. I wouldn't really recommend anything else, just from personal experience. Here you can see just least secure to most secure. And as you can see here, I'm just going to go back. As you can see here, we have exchange hosted wallets, which are the least secure, and also online wallets. And I'll just go to the next slide. And as you can see here are hacks that have occurred on exchanges, some as recent as May of 2019, in which I'm sure everybody or most people have heard of Binance Exchange. Over 40 million was stolen from Binance. And one of the most infamous exchanges, Mt. Gox, around 460 million US dollars worth of Bitcoin installed at the time. And of course, that was back in 2014, so that would now be in the billions. That's why it is always so important to store your crypto, not on an exchange, but self-custody the crypto on a hardware or software wallet. Okay, and as with every investment, you must be disciplined and have key risk management. So of course, with crypto, objectives and timeframes are a big thing. When investing in crypto assets, for example, I would definitely set out a dollar cost averaging plan, whether it may be weekly, monthly, every 6 months, whatever really suits you, and invest in the market using a dollar cost averaging plan in order to lower your risk. As you all know, crypto assets are extremely volatile. You should also distinguish how long you will be in the market for. My own personal opinion on this is I'm in it for the long term. I also do the medium term investing and short term trade and stuff, but the majority of my crypto sits stored away in cold storage for the long term. And MicroStrategy, a guy called Michael Saylor, I think it's just past 2 billion what his company's put into the crypto. And again, he says that his company will actually hold Bitcoin for centuries. So of course, with any investment, you should also only invest what you can afford to lose. Really, it's that simple. It's far better than taking a get quick rich scheme mindset. There's many out there with crypto that'll try and seduce you to invest in their coins, when in reality it's a pure scam. And of course, you should also always keep your risk both calculated and low. Again, you can do this by following a dollar cost averaging plan, and also only investing in the top 1% of crypto assets. Just a bit later, I think it's in a slide or two, I'm just going to go over the methodology that I use or have used in the past 6 years when investing in crypto assets. And of course, again, we have discipline, which is continuing to invest in your dollar cost averaging plan, regardless of the price. For example, Bitcoin was a quarter of the price it was just 4 or 5 months ago than it is now. And if you're following a dollar cost averaging plan, you should always still be investing. And of course, as stated before, you should always keep all of your crypto assets off exchanges. And always remember that risk equals reward. So why should you invest in crypto? Well, in comparison to other asset classes, crypto is currently the best space to invest in for long-term return on investment. I've seen it myself over the past 5 to 6 years from December 2015. It really does provide a huge ROI. But of course, there are many crypto assets which you should avoid, in which I'm more than happy, as my members do a crypto queer, send me messages, is this crypto asset, a worthwhile investment? I do my due diligence for them for a couple of hours, checking it out, and send them back and say, look, it's a great investment, or unfortunately sometimes it's a scam. So I believe it is a great time to invest, as in the next 5 to 10 years, the use case of the top crypto assets will really come to fruition. It really is only a matter of time. Both Bitcoin and Ethereum have got regulatory clarity in the United States, being declared not securities. XRP, there's a current case going on with Ripple, and I believe that XRP will too be declared not a security. And of course, that will only have a positive impact in the space, as Ripple works with over 400 or 500, I think it was at the last count, banks and large institutions around the world. So of course, you want to get in early before the institutions get in and drive the prices much higher. As you have seen, only Elon Musk himself, one company, Tesla, announcing that they're converting 1.5 billion into Bitcoin. Look at the effect that had on the price of Bitcoin. I think it jumped over 10% in just the space of a day or two. So once one company does it, the way I see it, it really is a domino effect. More on that later on Bitcoin. And as stated previously, crypto assets and blockchain technology really are here to stay. They will be bigger than the internet, and in fact, they're already working on the decentralized web. And of course, crypto assets are the birth of a totally new asset class, and it really is the first time in a long time where retail investors such as you and I can get in before the institutions. As you can see here, this is the total cryptocurrency market cap in comparison to the total New York Stock Exchange market cap. And this is just obviously the crypto asset market cap, but in the future, everything will be tokenized on the blockchain, and it will far surpass the New York Stock Exchange market cap and many other markets. As you can see here, this is just a screenshot I took a few hours ago, which shows that the market cap in crypto is now sitting at 1.5 trillion US dollars, which if you would have said that to me 5 or 6 years ago, I might have believed you. I thought it would have took a lot longer, to be honest, for mainstream adoption to hit, but I really think it's starting to take off. When I first invested, it was below 10 billion at the time. So even when we hit 10 billion, 100 billion, and then obviously at the end of last year surpassing 1 trillion, it's a really huge milestone. And I don't know whether you can see the movement of my arrow, but just like there was a huge increase and huge decrease in price here, and also here, this will soon look like this. It really is a matter of time before we're in the tens of trillions and hundreds of trillions for digital assets. Okay, so next we're going to move on to what I would consider to be a good investment in the crypto asset market. So this is a method that I would use to distinguish high quality crypto assets from the rest. So first of all, obviously you have to understand what you're investing in. I think that goes without saying. So first is the team. So the team behind a crypto asset, or the community in Bitcoin's case, because there is no team, must have a clear focus on driving users, investors, and demand up. This is critical. We also have the tech maturity. The intrinsic value of a crypto asset will truly come from the underlying technology behind it. For example, can it scale, and what are the costs for transactions? For example, Ethereum at the moment has a problem with scalability. I think the last time I tried to send Ethereum, it was around $37 or $40 to send just a single transaction. It really is far higher than it should be, but that problem will be solved through Ethereum 2.0. And lastly, and arguably most importantly, is real world usage. This really speaks to itself. If it's not going to be used in the real world, if it's just a false promise, it's not going to succeed, and you shouldn't invest in it. Another couple of points is less is always more when investing in crypto assets. There are some people who have a portfolio of 50 to 80 crypto assets, sometimes more. In my opinion, that's just absolutely crazy. I prefer to focus on a small select of crypto assets that I believe will have real life use case in the future, and rather invest in 50 or 80, invest in between usually, in fact, we do invest in between 10 and 20. You should always ignore ICOs. ICOs back in 2017, again, 99% of them were a scam which went to zero. An ICO is very similar to an IPO, only it's an initial coin offering for the crypto asset. Again, many of them had huge promises to replace Bitcoin, Ethereum, XRP, so on and so forth back in 2017. People put vast amounts of capital into them ICOs. They went up thousands of percent, and now they're worth nothing. So avoid them. And of course, to state it before, you should always identify your objectives and your timeframes. Don't think we need to cover that. And of course, your risk tolerance. And of course, you also need to use an exchange. If anybody's looking to buy crypto assets, I would recommend using Kraken Bitcoin Exchange or using Coinbase. Okay. So how would crypto assets fit into a traditional portfolio with, say, stocks? So I believe that crypto assets must be considered a part of anybody's portfolio in today's day and age. One thing that's really popular with investors is they gradually invest. First, they invest in Bitcoin, just like MicroStrategy is at the moment. Just like another firm called Pantera Capital is really big into Bitcoin at the moment. And again, they're trickling down to Ethereum. It really is a trickle-down effect for the top crypto assets. You learn the basics of Bitcoin, what it's about, gold 2.0, store of value, and go from there. And of course, as stated before, you must avoid the risk of being overly diversified in 50 plus crypto assets. You're going to spread yourself too thin. Done a bit of research before this talk and found that the majority of asset managers are allocating between 1 and 5% to crypto assets at the moment. Again, you have others setting up a separate crypto asset portfolio altogether. For example, they may set up an other than Bitcoin portfolio, basically an altcoin portfolio, it would be called, or they also have a DeFi portfolio. And decentralized finance, that's a buzzword that's been going around recently. That is just the complete opposite of centralized finance. Again, there are lending protocols with that, where you can put your assets, crypto assets to work rather. But personally, I do not touch that, as there's a lot of beta testing going on around that, and I think it was just a few months ago around 5 billion in total, or 5 million, sorry, was taken from a DeFi protocol. So personally, I wouldn't go near it. And of course, there are some people like myself where the majority of my assets are sitting in crypto, and again, there's some people that are 100% in. So now I think we'll move on to the really requested topic of course, Bitcoin. Everybody knows, or at least have heard of Bitcoin before. So, yep, I think we'll just start with the way I view Bitcoin. So, put simply, Bitcoin is the crypto asset, the first one that everybody knows. It's the first one at the top of the list when you Google crypto. Just like MicroStrategy and Pantera, I view Bitcoin as a hedge against inflation. It is the best store of value out there at the moment. A store of value, of course, is an asset that can retain value over time. Suppose you purchase a good store of value today. In that case, you could be reasonably certain that its value will not depreciate over time. In the future, you would expect the asset to be worth just as much, if not more. And usually, this value is related to the asset's market price or purchasing power or monetary value. But in some cases, as in the case with Bitcoin and other crypto assets which have relatively low market caps, well, Bitcoin not at the moment, it's just shy of $1 trillion, but other crypto assets, it would be in relation to the asset's liquidity. So how easy it is to buy and sell. As you can see, this is the Bitcoin screenshot that I just took a couple of hours before I started preparing this presentation. Bitcoin obviously is extremely volatile, is up 12% just in the day. And of course, all time, well, not all time, this chart just tracks from 2013, is up over 45,000%. In my opinion, Bitcoin is a great store of value and is often described by people as digital gold, or gold 2.0 rather. Bitcoin is both scarce and indestructible. Bitcoin also cannot be copied or spent twice, the double spending problem. There's a lot of fake gold going around. People obviously compare Bitcoin to gold. These are some of the main reasons why Bitcoin gets more valuable over time. So, as you can see here, the US dollars have lost 90% of their purchasing power alone since the 1950s, as politicians continue to print more money. And last year, due to COVID-19, all the US dollars in total, 23.6% of all US dollars in total were printed last year alone. And now onto the reasons why I believe Bitcoin is a great store of value. It'd be due to scarcity, portability, and also divisibility. So we'll start with scarcity first. So unlike gold, Bitcoin, or money, in fact, Bitcoin has a finite supply. There will never be more than 21 million Bitcoin ever in existence. The Bitcoin protocol makes sure of this with a hardcore rule built in. The only way that you can create new Bitcoin is through the process of mining. Miners must crack a cryptographic puzzle using computational power, and in doing so, earn them Bitcoin. That is how new Bitcoin are mined, with a total never more than 21 million. And of course, due to these halvings, as per their name, rewards are halved, usually every 4 years. In the early days of Bitcoin, the system rewarded 50 Bitcoin to any miner that produced a valid block. During the first halving, this number was reduced to 25, and of course, so on and so forth. And this process will continue for around another 100 plus years. I think it's around 2140. So this process will continue for around 100 plus years until the final fraction of Bitcoin enters into circulation. And since Bitcoin is scarce and follows a strict issuance schedule, it is thought that long-term demand will exceed supply. I agree. Historically, a sharp rise in Bitcoin price has followed a halving. As you can see here, this is courtesy of Pantera Capital. It was just under a 9,300% increase after the first halving, just under a 3,000% increase after the second. And the currently one we're in now, Pantera estimates will hit around 115,000 US dollars per Bitcoin by August 2021. I mean, I can't see any reason why Bitcoin can't hit that value. I'm a lot more bullish on my price predictions for Bitcoin, but if you just want to ask me what I believe the fair value will be, I'll be happy to answer at the end. Next, we'll go into portability and divisibility of Bitcoin. Just get a drink of water. Okay, so we have portability. So Bitcoin is superior to precious metals such as gold and silver when it comes to transportability. You can store trillions of dollars worth of wealth on a hardware device that fits into the palm of your hand. And moving $1 billion of gold, in the other hand, requires tremendous effort and also expense. And in relation to divisibility, as stated before, there are only 21 million Bitcoins in existence, but each one comprises of 100 million smaller units known as Satoshis. A big thing that we have with members of CryptoClear is they couldn't wrap their heads around how you didn't have to just buy one Bitcoin, you could buy 1/100 millions of a Bitcoin. So obviously, as makes Bitcoin's divisibility, it makes it easier for small investors to buy fractions of Bitcoin. Next, we will look at demand and supply of Bitcoin, and then we'll finish on a stock to flow model, sorry. So with demand of Bitcoin, user adoption is critical, as it is with every investment, as it is crucial to a cryptocurrency's long-term viability. As for what drives users' demand and adoptability for Bitcoin, at its most basic level, money should be a store of value, such as the pound or the US dollar, but in fact it isn't. I think the pound's lost 99.7% of its value from it coming into circulation. That would be buying power. And Bitcoin is this store of value which large institutions and companies are seeking at the moment. As many companies are putting Bitcoin in their balance sheets, such as Tesla, MicroStrategy, and it really will be a domino effect. And again, these large institutions are not the type of folk who hold Bitcoin to flip it in a couple of days or a week. These institutions and companies will hold Bitcoin for generations. And of course, it's great for Bitcoin. And in relation to supply, just the last point on that, the rate of new supply of Bitcoin is obviously determined by the Bitcoin protocol through mining. This sharply contrasts with the traditional monetary system in which central banks and governments can print money whenever they want for whatever reason. Satoshi Nakamoto, the still unknown creator of Bitcoin, whether he's an individual person, whether he's a he or a she or a group of people, we don't know, supposedly holds roughly 1.1 million Bitcoin, which have not moved since they were mined at the time. And many people in the Bitcoin community think that this will never be moved. They almost consider them dead Bitcoins, so there's even less. And there's also estimated to be around 4 million Bitcoins in total, which are considered dead by the community as they haven't been moved in so long, and the addresses are extremely inactive. So we'll finish with the stock to flow model for Bitcoin, which is a really famous model. I think it was devised back in 2013 by Plan B on Twitter. So, and Plan B is a hedge fund manager. So in relation to stock to flow model measures the relationship between the current available supply of resources, so the stock, and the production rate, so the flow. Bitcoin's price will see a significant increase over time due to its continually reduced stock to flow ratio, which leads to scarcity, predictable flow, and global liquidity. And this will make a store of value as it currently is being viewed today. According to this model, Bitcoin's volatility should also decrease over time. The higher the price, the lower the volatility, as per this model. And as a summary, I'd just like to thank Ryan for inviting me to talk in this conversation about something I'm so passionate about, and of course to Colin for hosting it. And just a couple of contact details. You can contact me at Johnny McCamley or on any social media, or you can contact CryptoClear through the website. There's also a contact email, info@crypto-clear.co.uk. And I've also generated a code for anybody in this call. I'll keep it open for around a month or so, in which you'll get 50% off the lifetime membership using that code, SMIF50. So thank you very much for listening to this talk, and I really look forward to the Q&A.
Okay, thank you very much for that, Johnny. That was a very insightful presentation, and also greatly appreciated us having a discount on your future products. So we now open up to a Q&A session. I think I will quickly start us off just with a really broad question as to whether you think cryptocurrency will be a winner-takes-all market, because we hear an awful lot about Bitcoin. People almost seem to regard Bitcoin equals cryptocurrencies. So do you think there's room for other successes in cryptocurrencies, or is it more of a winner-takes-all scenario?
I think it definitely isn't a winner-take-all scenario. There's different crypto assets with different use cases. So you'd have Bitcoin for a store of value. You would have Ethereum for decentralized finance and smart contracts, XRP for payments, and so on and so forth. So it's sort of viewed as almost, I would view Bitcoin as a fantastic store of value, but in relation to payments, it's terrible. It's a terrible source of payment in relation to transactions per second, and also in relation to the blockchain. It's incredibly slow. I mean, if you send a Bitcoin transaction, it can take up to 60 minutes, where XRP can settle in 3 to 5 seconds. So there definitely isn't a winner-take-all scenario, but just at the moment, you're completely right. Everybody's flooding towards Bitcoin. It's the go-to coin, but it's really because it almost has a first-mover advantage in the space. And I think once other institutions, as they're starting to see now with Ethereum, it has so much scalability, and it's so much that can be built on top of it. And again, it'll just filter down to other crypto assets that they'll start to look into.
Okay, and do you feel that any other cryptocurrency will eventually overtake Bitcoin, with a different one having the largest market cap?
It's possible. Yep. I mean, if it was to had to guess who would do it first, it would be Ethereum. And then secondly, I would say it would be XRP once XRP gets regulatory clarity in the United States. But Bitcoin, I believe, will first go for gold's market capitalization of, I think it's around 12 trillion, which puts Bitcoin around 460 per Bitcoin. And I think really from there, it'll scale up pretty quick. I can see Bitcoin at the 7-figure, 8-figure mark in 10 to 15 years.
Okay, so does anyone have any questions? I'll leave it open for others. Mark, go on.
I've got quite a few, so I'll just ask one at a time, but
yeah.
let other people go. I always struggle with, I mined it myself back in the day, and it was sort of like, the money get rich quick scheme kind of thing. But now looking onto it more and more, I always struggle with what the point of cryptocurrencies are. And you can make it Bitcoin or whatever you want, but if we take Bitcoin, you say it's a long-term, say, storage solution. But what is there to convince people to put their money into it? And do we foresee a point where all of the Bitcoin is held and it's just held by everybody? It's never moved around. When you invest in a company, you're investing in that company because you know that they're going to grow and they're going to provide a service to the world. When you invest in Bitcoin, there's none of that. So why would you use it?
Yeah, I mean, Bitcoin's really a network effect. It's like anything. You can only sell for somebody to somebody who's willing to buy it at a certain price. That's where value comes from. And in relation to that, you make some good points in relation to the longevity of Bitcoin, like what happens when all the Bitcoins are mined, and what happens if a large institution holds so much Bitcoin that they just decide they're not going to move it around. But what I would really say to that is, in relation to why people would invest in Bitcoin, is that it's proven statistically to be the greatest return on investment the past 10 years in the space against anything. And also in relation to the network effect, obviously, the more people flood to the Bitcoin network, the more value will be held. Sort of the way I would view it is that the money is the power, so to speak. The more power in the network, the more utility it will eventually have. I know obviously PayPal have come out and said that, in fact, they already do in the United States. They allow customers to buy Bitcoin and some other crypto assets. And I know it's coming here to the UK soon via PayPal. But yeah, I think Bitcoin's still a great store of value if you compare it to even the Great British Pound. The Great British Pound's lost over 99% of its value from its being instated. Where I know Bitcoin's only been around 11 years, coming on 12, but to me, Bitcoin definitely does have more value than both gold and the Great British Pound or fiat currencies long term.
Okay, just to follow up on that quickly, I mean, I understand that completely. Like you say, it does rely on people wanting to buy the thing, because if people don't want to buy the thing or sell the thing, then it's worth nothing at the end of the day. So what's to say that people are going to continue doing that? I mean, you can say, yes, in the last 10 years, it has been so great, and it's probably because it's a brand new thing. And there's a lot of people that see it as, oh, I can make a lot of money off of this, but that's going to peak at some point. That's not going to continue forever. And so it's what happens to the value of it then, because there's nothing intrinsically for it to fall back on. If the pound suddenly crashes and we have to get rid of a bunch of money in circulation, we can still go back to the fact that it's based off of the original gold. Whereas with Bitcoin, there's nothing there for it to be based upon. So what happens when you reach that point?
Yeah, I mean, I just think that Bitcoin has been through, as the crypto market has, many cycles of ups and downs. There's been, crazy highs where it's increased 10,000+% in a matter of years, and there's been decreases where, people have been left in tears. And in my own opinion, I think Bitcoin will last. I think Bitcoin will be the go-to store of value for institutions, and I believe it will only be a matter of time before central banks start considering holding Bitcoin themselves. To me, it's a far superior version than gold. Most central banks and institutions hold gold, and I really just think, why would you not upgrade to gold 2.0? Obviously, you can always mine more gold, you can find more gold. Where with Bitcoin, there's only a limited supply of 21 million ever in existence.
Sorry, just to clear up that, because I don't quite understand, why would you hold it? Like, why would banks want to own it? I know you say store of value, but what exactly does that mean?
Just if it's compared to fiat currencies, which have lost their value so much over time compared to Bitcoin. I know obviously you're comparing a huge time frame as opposed to 11 or 12 years. But for me, Bitcoin's only getting warmed up as the whole space is. It's a really infant market. It's worth a $1.5 trillion, which is obviously a huge amount of capital in a market. But whether we want to hold it, for me, is pure store of value.
Okay. If there's any more, Mark, feel free to put your hand up again. So I just have one other bare point just to add on that. We've heard a lot of skepticism about Bitcoin amongst the people whose influence really matters in the financial system. Most recently, we heard from Janet Yellen, the US Treasury Secretary, saying that Bitcoin is extremely inefficient, which I think, Johnny, you admitted during your presentation.
Yep.
However, does it concern you at all that governments could effectively clamp down on Bitcoin and, for example, stop corporations from adding it to their balance sheets?
Of course, yeah. I mean, I think it's actually not 95. I was going to say it's actually 65% of Bitcoin mining is actually concentrated in China, and of course, it wasn't that long ago where they stopped an IPO of a company. So of course, there'll be nothing stopping the Chinese government taking over them three mining pools, which account for 65% of the network, including Bitcoin down per se. I mean, the odds of that would be pretty small, but I'm not naive to the fact that it could occur. And of course, I'm aware of Janet Yellen's statement. I think it was only last week, wasn't it? She came out and said that, of course, as you said, Bitcoin is an inefficient asset. And I would agree, Bitcoin is inefficient, but again, the tech will improve behind the protocol. It always has from day one. As I was saying, back in the day, it was via IP you were sending transactions. Now it's a lot more secure with private public keys, master keys. It's obviously a threat to what you see floating about the spaces about quantum computing for Bitcoin. If somebody had the power to attack the Bitcoin network, one of them, it would be toast, so to speak, and it would be right. It would, but that's at the current state. Obviously, these technologies will improve and fluster over time. But again, to the Janet Yellen point, I can remember back in 2017 or 2016, I think it was actually, when Jamie Dimon of JP Morgan was coming out and saying, he wouldn't touch Bitcoin. And of course, they're now offering Bitcoin to their clients. They also built a blockchain and actually created a JP Morgan coin, which can be used for interbank settlements and stuff like that between various banks. Most of it's still in pilot, but it's sort of, people do come out in the news and say they'll not touch it, and then you'll find 2 years later they've been buying it.
Yeah, okay. Does anyone else have a point they'd like to raise? Okay, well, whilst everyone else
Go on
is
then. I'll
thinking.
jump on.
Okay, go on,
I'll
Mark.
jump back in again then. How do you ensure that miners continue to mine to keep the Bitcoin alive as profitability declines?
Yeah, that's a great question. I think there's actually a company it's a company. It's a non-profit company called the Energy Web Foundation, and they actually work pretty closely with Elon Musk. And what they're trying to do is decarbonize blockchain technology, so make it completely carbon neutral. So again, as you say, the reward for Bitcoin is obviously getting smaller and smaller every 4 years. The electricity is getting pumped up. I'm sure the bills for electric are through the roof. If you were mining vast amounts of Bitcoin to be profitable. So yeah, exactly as you say, over time, Bitcoin has become more and more, less and less rather profitable, and it's only a matter of time before a switch is flicked, so to speak, and it becomes carbon neutral, which will make it profitable.
Cool. Biggest question here is, how do you convince really the average person to use crypto? Because at the end of the day, I mean, not just Bitcoin specifically, but Ripple, Ethereum, Dogecoin, any of them. For them to work successfully, you need to have the average person using them, because you need more buyers and sellers. So how do you get the average person to do that when it's quite a complex thing to wrap your head around, and to even own, to sell, to buy? It's all very complex at the moment. So how do you deal with that?
Yep, 100%. I mean, even in today's day and age, if you send a payment from your bank account to your friend's bank account, you probably don't know the process that goes behind the background. Probably very few people do. I wouldn't have a clue, what goes on in the background of a legacy system such as Swift. But again, that's the way blockchain technology will be. It'll be the next generation of blockchain, or the next generation of payments. For example, when you referred to XRP, so when you send a payment to your friend, it automatically hits their account, or so it looks anyway. The £30 is credited to their account, but really there's a settlement or an overlay in place of 3 to 5 days. And for example, XRP can finalize a transaction in just 3 to 5 seconds. I think it's actually closer to 4 seconds now. But and of course, XRP and Ripple, one of the many projects that work on the XRP ledger, they have 400 plus major banks around the world signed up. And once regulatory clarity comes in the US, it's really only a matter of time before US companies start putting on the switch and go, why are we locking up capital in Nostro and Vostro accounts? Billions of dollars. In fact, it's $1 trillion problem per year, especially for smaller businesses. So in relation to your point about how do you get the everyday user to use it, they'll not know they're using it. It will be used in the background, so to speak. That would be XRP in that case. Obviously, Bitcoin would be different.
So you don't see it completely replacing something like the dollar? You reckon the regular currencies will still will still be around, the Bitcoin or crypto will just be in the background? Is that what your sort of vision for the future is?
100%, yeah. Crypto assets to me have now solidified themselves as their own asset class. It's only a matter of time before central bank digital currencies come in that will replace cash long term. And of course, central bank digital currencies will be entwined with crypto assets and the underlying blockchain technology behind them. So yeah, it really is just definitely not. I do not see a world where, that's why I was saying in the presentation, I don't really view crypto assets as cryptocurrencies. To me, they're assets as opposed to currencies. Like, as you say, it'll never replace Bitcoin. Will never replace the US dollar or the pound or anything, in my opinion. Some people would disagree, but I don't believe that would ever happen.
Okay, thank you. I'll let David ask his question.
Okay, David.
Thanks very much. Yeah, you kind of answered my question as soon as I raised my hand. It was about crypto taking over as a main source. Yeah, taking over from fiat currency. But I mean, in your opinion, do you have any ideas on what it would take for crypto assets or cryptocurrency I know you don't really call it cryptocurrency, but do you know what it would take crypto assets to take over from fiat currency?
I don't think it'll ever happen. It would be my opinion on that. I don't think there would ever be a world where, obviously, we have paper money and coins. Central bank digital currencies are the next goal for central banks around the world. I can never. Some people in the space do see it, but me myself, I never see a world where crypto assets will in any way replace fiat currencies.
And why is that? What, in your opinion?
Just that the government entities and central banks will never give up control.
Okay, I get that. It's just an interesting point, because obviously crypto is taking over more and more. Do you see it as a means of exchange, or do you see it as purely that store of wealth that you were mentioning?
Yeah, so I would say Bitcoin is definitely a store of wealth. With Ethereum, that would be a different talk. Smart contracts, DeFi, so on and so forth. Same with ADA as well. It's another one that does that. But if we just take XRP, for example, solving a huge liquidity problem in the space. Last time I checked, it was around 5 trillion a year. The problem was basically funds being locked up in Nostro and Vostro accounts, especially for smaller banks and mobile businesses. And I don't really ever see. I would see XRP as a source of payment, because it's obviously going from bank to bank, or from person to bank or person to person in the background. You'll not even know you're utilizing XRP. Maybe should have actually included in the presentation. There's a great illustration from Ripple and also from the European Central Bank, which demonstrates how it would literally just be a central bank digital euro, which would then be converted into XRP in 3 to 5 seconds, go through the exchange, come out at the end with, say, the digital dollar or whatever it happened to be in 3 to 5 seconds, as opposed to a company pre-funding accounts and it's a $5 trillion plus problem a year, locking up liquidity, and everybody needs money to scale and grow their industries and business, even the big players in the world. And if that problem can be solved, why would they not? The way I can see it, why would they not, take up XRP and the XRP ledger?
Thanks very much.
You're welcome.
Mark?
Sorry, me again.
It's all right.
So am I just correct in assuming then that long term you're betting on the underlying blockchain technology and not necessarily the cryptos, because what's to stop the banks from taking the blockchain technology and just working that into the back end of all the banks, to replace and to solve all of these issues, and making things more secure and whatnot. Because I do computer science myself, so it's the blockchain technology is quite an interesting thing to me. But it seems, I think a lot of people, bulls and bears, seem to think that it's the blockchain technology that long term is more important than the actual cryptos. And then that brings me full circle back to what's the point of the current cryptos if we can do that?
Yep, again, there's, just as you say, there's a mountain of people in the space that have opposite opinions in it. It'll be interesting to see how it does develop. I do fully believe that the crypto assets will be their own asset class, but of course there would be nothing stopping, for example, a large institution. Obviously the Bitcoin network is open source code, anybody could copy it and replicate it, but the governments could do that with, the governments could try and copy a large corporation or business, and it's not the genuine thing. Maybe if 5 or 6 years ago somebody would have said that to me, I would have a different answer. I'd be very sort of uncertain about it, but just the complete network effect about the space, especially with Bitcoin being over, or just under $1 trillion at the moment, it was over $1 trillion. I just think that network effect and monetary power will never disappear. Of course it will reduce once crashes come and so on and so forth, but I think longevity, the crypto asset market will solidify as its own asset class, just like stocks, and the crypto asset market will be worth hundreds of trillions of dollars in the long term.
Thank you.
You're welcome.
David?
Just a really quick one. You say of wealth. Now, with most physical assets, you have a physical asset that you can chop up, like gold, for example. You can chop it up into little bits and you can hand it out to other people. You physically have it in your hand. The struggle I have with crypto, I do own crypto. I own a little bit of cryptocurrency, but I struggle with the concept of it being a store of wealth because there is no physical asset there.
Yeah.
What is your opinion on that?
Yeah, I mean, 100%. Some people sort of don't see or can't sort of comprehend or get their head around it. Just as you're saying, there's so many people that would, you can hold a bar of gold, how much, you'll probably know how much it weighs if you buy it. Of course you will, and you'll know how much it's worth. Whereas Bitcoin, it's a digit on a screen, that's worth, 40-odd thousand or whatever it happens to be at the time. So I completely get your point on that. I would just view that as that is the way the future will be. Even at the moment, a huge thing in the crypto asset space is NFTs, which are non-fungible tokens. So a big area of that would be digital arts. Many museums are now building virtual worlds online where you can put headsets on and go and visit it that way, as opposed to going to a museum. So I think there's definitely a wealth transfer happening at the moment where people are realizing you don't have to hold wealth in your hands, so to speak. It can be digital.
Actually, on that front, do you think it's a generational thing then? Because then the generations that are growing up with this type of technology, this thought process. What was it? It was Minecraft. I think Minecraft. Was it Minecraft? I can't remember now. You could go into a digital world and start buying things inside this digital world.
Yeah.
And you're buying nothing, basically. You're buying the ability to actually use something online. And do you think it's maybe then a generational thing where if people are growing up with the mindset that you can actually, the store of wealth is in this digital world, then that's okay? And then it's the older generation that are still fixated on these physical assets. Do you think it might be that?
Yeah, 100%. The way I see it, the future is digital for art. Of course, you made a fantastic example saying about video games. Even at the moment, I'll just give you an example. There's a crypto asset called Decentraland. So you can buy tokens called mana. And what you can actually do with them tokens is actually buy land and build physical houses or shops. So there'll be nothing stopping, you creating a fund and people going there virtually and talking to you on that. To me, that's just the future. The generation above me don't really touch online banking or touch PayPal, where I would be into that. And then my brother below me, he's just a completely different, he just does everything digital. There's nothing that's done in real life, or I don't know what the correct phrase would be, but the example that you give is great. People are actually going on to video games and buying, skins for characters and whatever else. And that's just the way I see it. The future is going to be completely digital for everything, including store of wealth and monetary value.
I'm not going to lie, that freaks the hell out of me, but yeah.
I agree, yeah. It's coming, but it's scary.
Okay, I'll come to you next, Mark. I just have a quick question of my own. At the moment, an awful lot of the bull case regarding Bitcoin appears to be around the idea of institutions adding it to their balance sheet. And I'm a shareholder in Tesla and also Square. Square's gone in very heavily towards Bitcoin. So I just wondered, is there any particular company or a sector of companies which you believe will be next to add Bitcoin to their balance sheet?
I would just say all of them. It really is that might seem very, very bullish, but I just believe it's a domino effect. Once one does it, sees the advantage of it over a couple of years, they'll all follow suit.
Yeah, but who do you think will be first? Who will be first in line?
Well, I know Google, they have a partnership with Ripple. They actually own a stake in Ripple rather than a partnership, and I think Google will definitely be looking to venture into it. IBM's also a huge company as well that is working with another crypto asset that I invest in, Link, to solve what's called an Oracle problem. It's basically getting data from outside the blockchain in from old legacy systems. And IBM, and there's another company that just escaped me off the top of my head. Yeah, IBM and Google work with them, and also Microsoft, of course. So to me, it's only a matter of time before sort of the biggest companies in the world like them will start banning it.
I would love to see Microsoft doing it, given Bill Gates well-known on Bitcoin. That would be the biggest act of sacrilege by Satya Nadella. But anyway, Mark, would you like to raise a point?
One last one, I promise.
Far away.
I just had a thought there when David was talking about gold and whatnot. What do you see it being a problem potentially if we were to see a large influx in the amount of gold and precious metals that we had available to us on the planet, essentially through, say, asteroid mining and that sort of thing that's coming in the future? Would that put a threat on cryptos because it would then re-strengthen traditional fiat currencies?
Yeah, well, I think as you say, that definitely is the future. They're already planning on how to do it. Mine gold and asteroids, as you say, and whatever else. We don't know where we'll be in 15, 20 years. I know obviously Mars is a big thing, but yeah, I think that the way I would view that is the more gold out there, the less scarce it becomes because there's more in circulation. And as per the stock to flow models, there's only an amount of 21 million Bitcoin, 4 million are considered dead. So you take that off it, and of course more gold can be mined and more gold can always be found either here or elsewhere. And it really, to me, it's no threat to crypto assets whatsoever.
Cool. Okay. Thank you.
You're welcome.
Would anyone else like to contribute with anything? I'm conscious that we've had about 4 or 5 people contributing and the rest of you haven't contributed so far. So would anyone else like to raise any points? Okay, well, in case you're thinking of something, I have a question for you, Johnny. You mentioned during your presentation that you have an idea as to the fair value of Bitcoin. I'm wondering if you can share with us what your idea of the fair value is.
Yep, I would say in 15 to 20 years, it would be between 10 and 15 million US dollars per Bitcoin.
Okay, yeah, and is there any particular reason why you've chosen that number?
Really, I would just say that it's going to go for gold, and then it's going to it's going to go for almost everything as a store of value. I really think it's going to reach 60, 70, 80 trillion dollars, and then eventually by that stage, other crypto assets such as Ethereum, that'll be noticed hugely by that stage, but it'll eventually trickle down. But of course, this is all speculation. But I sort of had a really bullish opinion at the start of crypto, and it'd be great to have this conversation again in that time and see where crypto and blockchain is.
Yeah, perhaps you'll be a multi-millionaire by that stage, or even a billionaire. Yeah, just one point on how some of these things that work. You mentioned during your presentation that Ethereum is currently very inefficient and that it costs you $30 or $40 to make a transaction. You then said that there's Ethereum 2.0 coming out. So how does that work exactly? Do people who currently hold Ethereum automatically get Ethereum 2.0, or is Ethereum 2.0 an entirely different coin which you have to buy separately?
So Ethereum 2.0, sorry, maybe I should have explained that a bit better in the presentation. What that is really an upgrade to the Ethereum network. So it solves the problem of obviously there's a huge problem with scalability. There's only a certain amount of transactions can be done on Ethereum per second, as opposed to Bitcoin and XRP. They all vary in transactions per second, and at the moment the Ethereum network is extremely clogged up with transactions. So that's why it's so expensive even to send a small amount. But again, Ethereum 2.0 has been in the pipeworks for a very, very long time. We don't really know when it will be implemented, but there's actually another token called ADA, Cardano, and they're also solving a very similar problem and could potentially pass Ethereum. So I hedge myself in both.
Yeah, I have to be honest, Cardano is my favorite cryptocurrency. I'm far from an expert in these things, but I like the look of Cardano. So perhaps, do you think that could be a great one for the future? I mean, I'm assuming that you will, given that you hold it yourself.
Yep, I mean, the whole Cardano Foundation, what they're doing, and obviously with ADA, it's absolutely fantastic. Charles Hoskinson, he's obviously one of the founders of Ethereum, and he just didn't really like the direction it was going, decided to go off and create the Cardano Foundation. And what they're doing with ADA, they're sort of taking on sort of not smaller communities wouldn't be the word, they're going for sort of more third world countries, trying to really transform how they get loans and how they get access to their money. And I believe he will succeed. He's got multiple deals in the pipeline. Just obviously they can't go live until the mainnet goes live on ADA Cardano. But I believe once that happens, I won't believe it. It's a fact that will unlock trillions of dollars of locked capital.
Yeah. Do you have a specific price point in mind for where you think Cardano could go within the next, say, 12 months or so?
12 months will be a bit hard sort of to predict. I mean, it's already surpassed its previous all-time high. It was just a couple of days ago it hit past 118. I think last time I checked it's around 140. But I think for fair value for Cardano ADA, I would say would be around $100. And I know that sounds extremely bullish, but I've been invested from 3 cents in ADA. It's now 140 odd, and even people thought I was a bit crazy when I said, Chainlink would be around $40, and when I bought it at 40 cents, and it's dipped a bit now, but it did hit $40. And again, that's one I believe will go into thousands, like Ethereum. Okay,
that's interesting to know. So does anyone else have any points that they'd like to raise? I mean, I've exhausted all of the points I'd come up with, so does anyone else have anything? Owen?
Yeah, just in terms of timeline, for when you think various cryptos will reach their peak during this cycle. I know in 2017, Bitcoin hit its peak, wasn't it in December 2017? And then after that, the altcoins all went on a run. So would you anticipate that the cycle would sort of replicate what happened 4 years ago? Or do you expect that, the altcoins will reach their peak a lot sooner?
Yeah, I mean, back in 2017, 2018, it was a pretty quick bull market. It was over in a matter of weeks, where at the moment, as Colin was saying about institutions and stuff being in the space thing, it's a lot stronger hands are in at this time. So in relation to how altcoins will perform, in comparison to how Bitcoin has performed over the past couple of months. I think they've already performed exponentially, but I think there's still a lot more room for growth with them. And I think it's, again, harps back to the point where there'll almost be a trickle down effect where all these big institutions and banks and corporations are viewing Bitcoin as a store of value. Then they're going, right, we'll look at Ethereum. They're looking at Ethereum and seeing the huge promise that Ethereum has, and then eventually they'll just keeping down the stack, so to speak. And I don't mean by market capitalization like 1, 2, 3, 4, 5, but it's more utility.
I suppose my concern is with Bitcoin, it's got more of a kind of predictable cycle because it's the main player in the space, and we also have over 10 years of data to base our predictions off of. But with a lot of the new altcoins in the space, it's a lot more uncertain. I'm still very bullish on the entire space in general, but it's harder to know when it's reached its peak and when you should cash out. Personally, I'll probably be laddering out, in the months to come. I'm nowhere near cashing out yet, but I think probably around May or June, maybe I'll start cashing out. But then, you've got that in the back of your mind. You're thinking, what if, these altcoins don't really go on a massive run until the end of the year? It's just very hard to know if it's going to replicate 2017 again. But another question, just to take the spotlight off Bitcoin a bit, because there's been plenty talked about it. I have about half my portfolio in Bitcoin anyway, but I'm very well versed on it. But another one I'm majorly invested in is VeChain, and I'm wondering if you have any thoughts about it or if you know anything about it.
Yep, I'll touch on the VeChain, then I'd love to have a conversation with you either on this call or afterwards. I always help members with Crypto Clear with an exit plan, where you were saying about you don't know when to almost take profit on your investments. There's a couple of strategies you can do there. A lot of people wait until they've maybe 2x their capital, 3x their capital, take their initial investment out. Another strategy would be to literally be extremely disciplined and say, look, I'm going to take 10 or 20% out at this price. And once it hits the price, just be like a robot and, just do it. It might, as you say, you could exit out of, VeChain at 40 cents if it went on a big run. And then all of a sudden, 3 months later, it's worth $4 and you'll be kicking yourself going, flip, I sold that 4%. But that brings in almost the,
Jesus. Well, if it hits $4, I'll be a millionaire, put it that way.
I mean, no matter what people say, everybody's greedy. It's human nature.
I'll take one.
Yeah. VeChain, I personally invest in VeChain myself. I think it's a great project, especially with they have huge partnerships with Deloitte. I think they're getting them on with PwC, and of course they're all over China with Walmart and Alibaba and everybody. They're really well intertwined. The Chinese government absolutely loves VeChain, so China's really making itself a leader at the moment, isn't it? Really in the global space, it really is compared to 20 years ago. So yeah, VeChain, I'm really bullish on VeChain.
Great,
brilliant. Cheers.
Okay, any final points that someone would like to raise before we finish? Okay, well, in that case, I think we can finish things there. So, Johnny, thank you very much again for giving up your time to talk to us today. It's been a very interesting presentation and discussion at the end as well. So, thank you very much for coming along today.
Thank you, Colin, and also thank you to Ryan as well for reaching out to me and getting me on this talk. I really, really appreciate it.
No worries. Thanks, Johnny. And I'm sure that speaking on behalf of all the members of Smith, again, just thanks for giving up your time doing that presentation for us. It was really interesting to hear what you had to say there.
Brilliant. You're welcome.
Okay, well, thank you all for coming, and a reminder that we have another guest lecture on Wednesday at 2 p.m. Colin Mclean, the CEO of Ethereum Asset Management, will be coming to talk to us about recent themes in the investment market, including bull markets, overconfidence, and the illusion of wisdom. So that will be occurring on Wednesday at 2 p.m. You're all welcome to join us for that. And just to finally thank Johnny once more for his presentation and his answers to the questions this evening, and thank you all for coming along. So on behalf of the Smith, I hope you all have a great evening.
Brilliant. Thank you.